Well, good afternoon, and welcome to this ACT webinar on realising the long-term benefits of SEPA. Although many commentators are emphasising the looming 1st of February 2014 deadline for SEPA cutover, we thought it would be more constructive to focus on the benefits that embracing SEPA can bring to the business. We have some great speakers lined up for you, and I hope that you will take this opportunity to take part in the debate, share your thoughts and experiences, and reflect on the opportunities that SEPA may offer your business. Just to make some introductions, my background is in multinational corporate treasury, and I spent much of my last role before joining the ACT in developing innovative international cash management solutions for a major B2B logistics group. Joining me here amongst our speakers, Violetta Negruta is the EMEA Payments and Receivables Market Manager for RBS Transaction Services, responsible for packaging and positioning holistic cross-product value propositions to corporates, non-bank financial institutions, and financial institution clients, which is pretty much everyone, I think. She's based in Amsterdam, and prior to her current role, she was EMEA Receivables Product Manager, responsible for designing efficient and automated collection solutions, including international direct debits, lockbox, and smart collect services. She's held various roles in cash management services responsible for Central and Eastern Europe. Natalie Willems-Rosman heads up the UK International Payments team within RBS Transaction Services, leading product development and management of international payment solutions for corporate clients. This area covers the full suite of receivables and payables and is responsible for shaping and implementing the SEPA agenda for the UK. Prior to this role, Natalie held various positions in client services, implementations and operations both in Amsterdam and London, and Natalie also holds a Masters of Science degree in International Business. Final member is Mike Cassidy, who's Corporate Treasury Director, MEAI, for Wyndham Worldwide Corporation. He's based in London and leads the MEAI team within the Global Treasury Department of Wyndham Worldwide, which is the global market leader in various lodgement-related sectors, including hotel franchising and timeshare exchange, and is listed on the New York Stock Exchange. Mike is responsible for managing the group's in-house bank and servicing the region's treasury needs. He has extensive treasury experience within hospitality and travel sectors, and previous posts have included Treasury Director at eBookers and Treasurer of Le Méridien Hotels. Mike graduated from Aston University and is a chartered management accountant as well as a member of the ACT. On today's agenda, Violetta is going to start with some thoughts from RBS on driving value out of embracing SEPA, and then Mike will follow with a presentation outlining his business's approach to SEPA direct debits. We'll follow the two presentations with a panel discussion, and we would very much like all participants on the call to send us your questions using the webinar interface by clicking on the Ask a Question button beneath the media window. So, without more ado, I'd like to hand over to Violetta for her thoughts on the subject. I'll just move forward a couple of slides.
Thank you very much, James. So let's have a look at SEPA and how it fits into the corporate objectives. Since the adoption of SEPA regulation in February 2012, SEPA migration was erroneously considered to be a compliance project. Undoubtedly, the potential outcomes of non-compliance could be considerable, but corporate treasurers should not ignore the benefits and opportunities SEPA offers. As one of the most significant areas of potential benefits we see is centralization of payments and collections across 33 countries in the SEPA area. So one of their biggest potential benefits could be the operational efficiencies, centralization that drives down the cost. Account consolidation opportunities could facilitate centralization of cash management functions and operations in such centralized vehicles like shared service centers, payment and collection factories. The introduction of common methods and rules by SEPA for the national and pan-European mass payments provides opportunity to concentrate locally held accounts in one location, irrelevant of the country within the SEPA area. This helps the centralization of cash management functions, and cost savings might be realized by reducing the complexity around the number of accounts an entity holds around Europe, its connectivity with the local banks or the regional banks, and the payment formats it uses. Another potential benefit is, of course, working capital optimization, which can be delivered by the transparency SEPA provides. For example, with defined execution timelines and certainty on expected payment amounts, cash flow and liquidity planning can be significantly improved. As mentioned also, the increased operational efficiencies drive down the costs. And among the major cost drivers are the variety of local formats in the legacy SEPA, in the legacy credit transfers or direct debits, and the complex reconciliation processes that it has due to the non-harmonized remittance information. So SEPA is bringing it a very standardized and harmonized approach towards reconciliation through the dedicated reference number fields and full remittance information provided in the SEPA native format. As well as the introduction of SEPA direct debits as the first collection instrument cross-border that can be used throughout the Eurozone may represent an opportunity for certain corporates to expand much easier their business beyond local markets. So, is SEPA relevant to your company? I think there are a couple of questions you may ask yourself to answer this. So, does your company have European operations or subsidiaries holding euro accounts within UK, for example, or any other countries within the European Economic Area? Or do you have a growth strategy in Europe and want to easily enter into the new European markets? For those companies with existing pan-European operations, are you thinking of new operational efficiency gains, such as payment rationalization and optimization of euro cash flow, or even bank relationships? If your answer is yes to one of these questions highlighted here, then you can not avoid SEPA. You actually have to embrace it, I would say. So let's have a look what is the market doing at this moment as we speak, and what are their journey that SEPA is having ahead from the regulatory perspective. There are two main milestones I want to focus on. Is their the date February 2014, where all European stakeholders in Euro country need to migrate to SEPA credit transfer and SEPA direct debit. The other one is very important, also is the 31st of October 2016, which is a mandatory date for non-Euro countries to migrate to SEPA credit transfer and direct debit and implement the ISO 222 XML, which holds, let's say, for the UK-specific companies. However, this doesn't mean that you are not able or you cannot initiate already SEPA credit transfer and direct debits out of UK. Actually, we would say you can do so, and we encourage to reap the benefits of SEPA offers. So let's have a look at the market adoption to date. With only 3 months to go before February 2014, I have to say that SEPA adoption is still lagging behind, and the statistics don't really lie. If you look at the SEPA credit transfers, the market has only reached the overall migration of over 50%. To be exactly, in September was 56%. So within 3 months, still 40% of the volumes need to be migrated. We expect to see an accelerated adoption during the next couple of months, as organizations across Europe have indicated that their plan is to migrate actively in this last quarter of the year. But this needs to be very carefully managed. In terms of SEPA direct debits, migration shows actually not very significant progress, and overall we are still below 7%. One of the main drivers are the big billers in most of the countries at this moment, who are really responsible for this movement and uptake, with countries like Ireland, Netherlands, and France showing bigger progress in this respect, but still not as we would like to see or as the market would have expected. Slower adoption of SEPA direct debits, one may can ask why do we see such a low number? So it can be attributed to the complexity of adopting of this product, SEPA direct debits, and mainly the necessary technology changes that it requires, and their additional information requirements such as mandate reference information and creditor ID. As well as SEPA direct debits has introduced a completely new flow of mandates. So in most of the countries, there was previously a debtor mandate flow, and SEPA direct debit introduces the creditor mandate flow. Another reason was also an unclarity around the legacy mandate migration. So at this moment, I think we have a clear statement or indication of that status. So based on our discussions with our client base and also the market statistics, we have seen that there are two approaches taken by corporates in general towards SEPA implementation and migration. Early adopters took a more strategic approach by integrating SEPA within a wider cash management strategy, but the majority of the market took a wait-and-see approach. Despite of the market statistics and the different approaches taken in the market, the hard line on SEPA regulation compliance still prevails. So the European Central Bank still continues its hard line of only Plan A, and restates that it will not be allowed for banks to process non-compliant payments after the migration deadline. So their statement is there is no Plan B, there is only Plan A. However, given that most of the companies are looking to migrate and to switch over to SEPA at the end of this quarter, there are still some operational risk or concentration risk which needs to be taken into consideration, and maybe some businesses or some countries, units in different countries may not be ready, and these units may need a contingency in place or a Plan C. So we call it Plan C, and our Plan C for the corporate is the RBS SEPA Accelerator solution, which is an end-to-end SEPA migration service as a one-stop shop solution for all the SEPA flows within 33 countries, both for RBS and non-RBS accounts. It's a solution that provides conversion services and enrichment services for both SEPA credit transfer and direct debits. It's an immediate solution to your SEPA compliance to achieve compliance in a very short time frame. However, I have to mention that this solution still requires lead time for implementation, so I encourage you to look at and screen all your businesses in units to assess whether you are well in time for the migration or not, and all your businesses will be compliant. So going into the first, my initial introduction about SEPA and corporate objectives, if you look at the bigger picture and looking at SEPA as a catalyst for centralization and standardization of the cash management, SEPA offers clear advantages to centralizing payments processes such as in terms of operating model by standardizing the accounts payables and accounts receivables as well as mandate management processes and improving controls and efficiencies. By leveraging a single technology environment through the single XML format across 33 countries, you can achieve better automation across the business. You have also, SEPA introduces their IBAN as their harmonized account format across these countries, so you will also achieve a lot of efficiencies in this term. Another advantage is reducing costs through the rationalization of bank accounts when making payments and collections from a single euro account, and also provides opportunity to review your euro cash management structure. And last but not least, it gives you a platform to review also the existing bank relationship. In terms of the liquidity, let's say the promised SEPA land says, yeah, you can do your payments and collections out of single euro accounts. However, the reality is that there are still national bodies or countries where there are still niche products, like in Italy, Riba, and where a local account is still required. So we'll see that there is a hybrid euro cash management structure still required. But in a longer term, a single euro account is still realizable, we think. So the next steps in terms of evolution of treasury centralization, SEPA is the main catalyst in Europe, and in successfully leveraging SEPA migration, what we recommend is to centralize the euro account at treasury level, and by deploying such centralized vehicles like payment factory and probably including payment factory in-house banks by leveraging the opportunity of XML standard and on behalf of structures. And once you have rationalized and centralized your payments across Europe, the next step is to look at the collections and make most advantage of the SEPA direct debit and on behalf of structures. SEPA is also providing a flexible account location, whereby, for example, if you have an euro account in UK, you can centralize all your payments and collections throughout Europe and executing them from UK. And I think Mike has a very good example that will highlight how they have made those decisions and how it is working. Also, by deploying these structures and on behalf of structures, one of the preferences or the prerequisite is to deploy a single technology environment or a single ERP system, and looking at adoption of XML formats, not only from the euro perspective and from the euro payments perspective, but also for non-euro transactions, and centralizing beyond the Eurozone, and including bringing such countries like from Central and Eastern European countries or Baltic countries as well as Nordics into their new cash management structure. So this is, in a very short view or bird view, let's say, the main advantages that SEPA offers, and our recommendation in terms of how to look at the opportunities that SEPA offers. And SEPA regulation and the emerging technology is enabling really further centralization and a great operational efficiencies for your cash management strategy. So if you would like to visit our website for additional information on SEPA, you'll find our SEPA handbook and the SEPA direct debit country expertise with a lot of information about SEPA direct debits migration, niche products, and so forth. And also you can consult, of course, the EPC websites that provides latest SEPA information in terms of statistic, rule books, and mandate guidelines. And now I would like to hand over to Mike Cassidy to present the case about SEPA direct debit implementation.
Thank you very much, Violetta. As a way of introduction, we implemented SEPA direct debit in our RCI Europe organization. RCI Europe has a membership throughout Europe and the Middle East, predominantly in Western Europe and UK especially. Membership is paid annually, and then when a member exchanges, a further fee is levied. There are several ways to pay the membership fee: card payment, MOTO or online, check, direct credit, ACH or SEPA, and direct debit. We even have members who will come to the office with cash, which we accept and then politely give them a direct debit form. Direct debit is our favorite method of payment. This is due to low processing costs and especially because of high retention. Approximately 25% of the membership pay via direct debit, so that's around about 80,000 members, probably 2/3 of those in sterling and 1/3, about 25,000 by now SEPA direct debit, predominantly from Spain. At the end of 2011, we found ourselves in a situation that following a successful syndication of our debt, one of our relationship banks had fallen out of the syndicate. These things happen. It just so happened that that particular bank was our direct debit provider for international direct debits, and this was in Germany, France, UK, and Spain, and they also provided the middleware to run this system. At that point, SEPA direct debits were still somewhat unclear, so we were in a situation where we basically had to move bank. Plan A was to move to RBS, but maintain processing direct debits through legacy systems. Basically, we wanted to see the technology improved, the system improved, and we're basically waiting for some of the major European utility companies to use SEPA. And then, at the second stage of that project, we would move to SEPA. However, in the first half of 2012, as we took a deeper dive into it, we realized that the amount of effort that we would require, not so much on the banking side, but more on the technology side, would mean that moving to legacy systems would probably be the same amount of pain for us as moving to SEPA. Our legacy bank were patient, but they were looking to move on. But probably the key, and why I put it as first bullet point, was the rules and guidelines around the core SEPA scheme became clearer. The real clincher for us was the fact that we wouldn't have to approach existing members and ask for a new mandate. For a membership scheme, that was critical. So, middle of 2012, we hatched Plan B, which was to move to SEPA and RBS directly. The senior leadership team of RCI signed off, and crucially, we got the right IT resources. And a project group of treasury, accounting, marketing, and IT met every 2 weeks as we went through the project. We were aiming to implement by the end of 2012, mainly for 2 reasons. One, our legacy bank were beginning to lose patience and want us to move on. And 2, Q1 is the peak time for membership renewal. So what actually happened? The project was closely monitored and managed. Of course, there were some hiccups. We don't exist in a vacuum, so other projects at the time took priority. In other words, firefighting. Both RBS and ourselves were new terrain. We didn't realize it at the time, but we were actually the first RBS UK customer to move to SEPA direct debit, and small errors were made on both sides. A couple examples. One, when we received documentation to process direct debits, €1,000 was the minimum amount, which was obviously a little bit ridiculous in hindsight, but we didn't pick up on that, and nor did RBS. And two, which was our error, we didn't pick up that we needed to add the SEPA option to our RBS Access Online platform. Other issues included the fact that the middleware needed tweaking, and also the software to change legacy instructions to SEPA instructions needed. We actually used an earlier version of the system that our provider had given us. As it turned out, the project then moved target from January through to February and finally to March. We ran 3 live tests. The first one was rejected because of the issue of €1,000. The second was rejected because of the issue on Access Online, which we hadn't spotted. The third, however, was successful. So on March 22, we ran the first live test for all members who were coming up due for renewal at that time. We did anticipate and were fearing rejection rates of about 25 to 30%. As it turned out, we were remarkably and pleasantly surprised that the rejection rate was about 1%, which was in line with the legacy systems SEPA was replacing. So, in summary, we got there. SEPA Direct Debit is now working in the UK. We do have a small amount of members who actually do pay SEPA in the UK or Euro in the UK, very small, a handful. But more importantly, Spain with 20,000 plus members, Germany with around about 3,500, and France with 1,500 did onboard successfully. And we're looking to onboard other countries in due course. I think Ireland and Italy are top of the list. In terms of lessons learned, well, like any new process, you have to align the key stakeholders and make sure that they're fully on board. The project plan needs to be tightly controlled and should contain perhaps more contingencies than we budgeted for originally. So in summary, SEPA DD was a challenge, but once in place it does offer operational benefits. Whereas previously we had an account in each country, which then would be manually swept to a UK account within our Euro cash pool. Now we just have the one SEPA DD Euro bank account in our RBS Euro cash pool in the UK, where all the receipts come into. So that both helps from operationally and in terms of liquidity and efficiency. With that, I'd like to thank you for your time and hand you back to James.
Well, thanks very much, Mike, and also for your letter, for your very instructive insights. I think particularly from Mike, I think what it demonstrates is that A, embracing SEPA is within the capability of normal businesses, and you don't have to be a massive multinational to either to implement it or indeed to benefit from getting engaged with SEPA. Just to kick off the panel discussion, we've had 2 questions in which are kind of along the same lines, I think, and might well be worthwhile just sort of looking at together. We've had a question asking why do many companies go for alternatives to SEPA direct debit? For example, e-invoicing with automatic payments, citing common examples perhaps in Finland and the Baltic states. And then we've had another sort of similar question saying they've been told by a number of businesses within the Eurozone that they're able to use existing legacy mandates, and therefore just with some small alterations. Particularly France and Spain, and I guess you might be able to pick up on the Spanish experience. But I was just wondering, are people deliberately avoiding direct debit because there's a sort of actually a misconception that it's harder than it need be, or are there regional variations which make it mean that it's easier to transition in some countries than others?
I think I will take this question. In terms of alternatives to SEPA direct debits, I think there are a couple of elements to this. There are different countries with different usage from the legacy perspective, direct debits, they are usually, it's a common collection and payment practice. So in the Netherlands, for example, that's the biggest utility companies, big dealers, they're using direct debits as the most common payment instrument. So in these countries, usually there were also very effective payment methods, the legacy direct debits. In other countries, direct debits for the market is not a very known payment instrument. So it was really complex also to adopt such an instrument. And probably also, you're right, the direct debits is, for some countries, as I mentioned, is bringing the whole credit and mandate flow process in place, where previously their mandates were stored at a debtor's bank, and where now the creditor actually needs to take on board the mandate management. So there are several elements to this, right? And for example, in the SEPA direct debit, as example, the invoicing with payment with automatic payments, that's another alternative. And in Finland, we know, for example, invoicing is quite popular, and the whole electronic payment instrument is quite in a high adoption. But they were also the first country who have, as a country, moved as first mover to SEPA credit transfer and direct debits, and they were compliant for a long time.
Sure. Okay.
And
I think in terms of the second part of the question regarding mandates, I mean, for instance, in Spain, you can take direct debit over the telephone, and that's vital. So the fact that we were able to keep the telephone mandate without having to contact the member was important. In France, obviously, you need a paper mandate, but we're able to keep the existing paper mandate. But obviously, when new members come on and we have new business, you have to use the method that was pretty much in place during the legacy system. So in Spain, we would do take it over the telephone. In France, it would have to be a paper mandate. In the UK and Germany, it'd be moto or online.
Sure. And I think that possibly covers off another question we've had in, which was actually directed to Mike, asking how you manage the pre-notifications, that being, perceived as one of the major difficulties in the transition.
Well, I mean, in terms of, as I say, it is a membership scheme, so we do send out things such as magazines to the members. We will send out email shots to the members. So for us, perhaps it was easier in that respect because we have the members' details. So it is, if you like, a closed community. But I would have thought, were you using direct debit, that would generally be the case anyway, because people have to give you their instructions in the first place.
Sure. Okay, thanks. I'm sort of reading these questions off as they come through, to be honest. There's quite an interesting one, sort of naturally looking at cost, saying, noting that, one of the published final objectives of SEPA was to bring the cost of EU payments into line across the board. And someone here who I think is based in, I think they're a UK-based company, but they're finding that when they're paying from their French bank account, they're paying €1 a pop, and when they pay from their UK NatWest account, they're being stung for a hefty 10 to 20 euros. And I've got looks of stunned disbelief here. I don't know whether that's a Natalie thing, but presumably, are they getting the payment instruction correct, or is this something where the individual parts of the bank have yet to sort of harmonise their internal procedures?
Well, I think it's a very valid point that it's being brought up. Obviously, we've had a lot of different countries in the SEPA zone where traditionally payments have been processed at different rates as well. Here in the UK, a payment towards any of the European countries was always seen as a cross-border payment. So we've come from different backgrounds with different tariffs as well. Our expectation definitely is, with SEPA coming into place and with with the standardization that it brings, it will be easier for payments to be, or for clients to choose their banks, but I think it will also drive competition, and specifically around price. So personally, I think the UK is a market where traditionally international payments have been priced relatively higher. And with SEPA coming in, I think clients will absolutely see a benefit of that going down in the future.
Sure.
In terms of when that will happen, I think it's also in line with the adoption of SEPA, with the readiness of the market. But I think ultimately, if we look a couple of years down the line, there will definitely be a very different landscape in terms of payment pricing across all of the countries in the SEPA zone.
Yeah. Okay. Thanks. What else have we got here? I've got a couple of related questions about SEPA direct debit and looking at sort of the low take-up so far of SEPA direct debit. I've got two related questions about whether going for the core SDD or the business-to-business SDD product mechanism is to be preferred. And I was just wondering, again, it's probably for Violetta and Natalie first off, but maybe Mike, you have a look at how you've tackled it. Is there an easy way to putting in SEPA direct debit? Is there an easier option to choose?
Natalie. I mean, in a way, it depends really on who the people are or who your customers are that you're debiting. So there are very clear rules about when you are allowed to use the B2B scheme and when you're allowed to use the core scheme. So B2B is specifically only being used for businesses, and it doesn't include any micro enterprises. So when you're looking to debit businesses, it could be an option for you. The reason it doesn't allow debits from consumers is that it doesn't have a refund option behind it. So if you are planning to debit consumers, then you only have one option. In terms of the B2B scheme and the core scheme, they have some specifics around what the responsibilities are of the creditors, what the responsibilities are of the debtors. Also, I think one of the things to consider is the adoption rates in the different countries as well, and the reachability. So there are various items to it. There's no easy answer that one of the two schemes is better. It really depends on the setting of your company, of your debtors, and that will then determine which scheme would be better for you to use. Sure.
Okay. And Mike, I guess you're doing B2C. So
yes, we're doing the core scheme, and for us, really, when I was looking at it, the core scheme did look to be a little bit more straightforward than the B2B. But for us, this was really about member retention as opposed to paying our suppliers, for instance. So we really concentrated on the core scheme purely.
Sure. And again, for Mike, I think a sort of rather more operational question here. When you started out on this, or when you got the SEPA direct debit going, the question here: did you need to submit two main payment files, or indeed at any one time do you have to submit two payment files, one for first-time users and one for continuing users, or can you just do
I believe
one
we're
file?
just submitting one file.
Yeah.
If someone joins, they're put onto the file.
And they're part of the mill.
Exactly.
Sure. There's quite a good question here we've had in asking whether, particularly for SEPA DD, but also SEPA generally, can it be used for other currencies besides euro, or is this just for euro?
Well, it is basically, it's just for euro in terms of collections, so you can only collect euros. However, you can debit other currency accounts. So potentially you could be debiting a sterling account, or you could be debiting a US dollar account. Depends on kind of like what your banks offer. So that means there will be an FX conversion that takes place.
Yeah.
But ultimately, the creditor can only be collecting euros.
Okay, and if you're paying, presumably you're paying euros, but it's free to you to choose what account to pay your euros from.
Exactly.
There was another question. Yeah, again, sort of looking at centralisation issues. Once SEPA, well, in fact, I think this is true now, but the question actually says post-2014. Please could it be clarified whether it is possible to operate with a single euro account or not when considering receivables? And this is against the background of customers in Europe paying to a bank within their own country. But if this bank account is closed and they pay cross-border, will they suffer higher charges?
So, indeed, the question is about the transaction costs, and SEPA is now leveling the domestic transactions to or the cross-border transactions to the level of the domestic transaction costs. So if you are doing a euro transaction cross-border, it shouldn't be much. It should be at the level of the similar transaction as domestically done.
Because you're paying euros within the single
European payment area.
Yeah.
Yes.
Yeah. And to be honest, if I could slip in a question of my own here, I know we've been talking a lot about centralisation, but one of the things that occurred to me was actually with such low transaction costs, you can actually build whatever bank account structure best suits your business. So if you want to centralise and centralise to a particular place, you can. But equally, you could build a structure where actually every operating unit or whatever had its own euro account. And then you could sweep that up or not. I mean, there's actually a world here of infinite flexibility, I think.
I think you pointed very correctly, and that is the message also SEPA is trying to promote, and we are trying to also promote that SEPA is providing also this flexibility of account location, because it says that irrespective of where the euro account sits in which countries, you can make payments and collections to your vendors and customers out of that euro account. So, for example, if you have a euro account in UK and you have centralized the commercial flows from all the local entities across Europe into that entity in UK, then you can do the payments and receive the collections into that account of that entity, right? And in fact, now you can really look at the review and scrutinize the local bank relationships and bringing more economies of scale also, and what is the business rationale to keep also the local account in that country while you can do payments and collections, vendor payments and collections out of a single euro account.
Sure. I think we're going to have one last question here, which is about reconciliation issues. If you're going to run a collections factory and you're going to run SEPA direct debit out of that collections factory, can you build an automatic reconciliation engine on the back of SEPA direct debits? Is there any difference to what people would do normally?
I think it's really down to we're discussing the corporate organisation. So, for instance, the organisation I work for, we have 9 business units in the region, all different legal entities within each business unit. So the sort of engine you'd have to build to accommodate that would probably drive most accountants to drink, I think.
Yeah,
so,
but of course treasurers would
yeah, you'll love it.
Take it, yeah, exactly.
So, yeah, it really depends. If you're a very vanilla business and you have one legal entity, I think, of course you can. But, for most businesses, I don't think that's true, especially large businesses.
I'm thinking,
I can add to that what we've seen also. Some of the corporates were already using the on behalf of fields in their SEPA native format, XML, and they are already using for SEPA flows, but also Euro flows, but also non-Euro flows, so that they can make collections on behalf of other entities, so payments on behalf of other entities. Or, for example, if you're running multiple brands company, you can also use these fields for the trademarks, right? So you can use one creditor ID for that entity and using the on behalf of structure for the brand or the trade name. And also in the remittance information, as most of us know, the reference information is now 140 characters. So there you have a more possibility to bring more information and increase the reconciliation rate also if you have a structured and enough information.
Okay. Well, look, thanks very much. I'm really sorry, but we seem to have run out of time. We've got a raft of additional questions here, which I believe we can consolidate at this end and respond to over the next few days. We're going to have a recording available in a couple of days of the session, and we'll circulate a link to participants. And if you want to follow up this discussion, please use the ACT's LinkedIn group as a forum to do so. It's been a fascinating discussion. Before we go, I'd like to thank our three speakers, Violetta, Natalie and Mike. And I'd also very much like to thank RBS for sponsoring the webinar. And finally, I'd like to thank all of you out there for your participation and questions. And I wish you all the best of fortune in supporting your businesses in the SEPA migration. Thank you very much.